Oh, I'm sorry. What's up, guys? Trying to get my damn video to go. I apologize. Welcome to Spac's Attack. Spencer Israel, Chris Katje, Mitch is out today. I'll be back tomorrow. Chris, hope you had a good weekend. We got a lot to discuss here. There's a lot. I want to set the table for the month of March, what is to come as far as the calendar is concerned. We got a big deal in the space sector this morning. We'll talk about that. And we're going to get into the nitty gritty of Bill Ackman and what he's doing in the Spac space. So a lot to get to on our show. We'll, of course, answer your questions in chat. Drop your questions in there. We will get them answered. We've got a full hour of Spac's content ready for you. Chris, shall we go into first? How was your weekend, man? Let's talk about that. How was your weekend?
Weekend was great. How about you, Spencer?
Uneventful. I think. I celebrated Purim for those who care. Actually, no, I didn't. That's a lie. And yeah, okay. Let's get into some headlines here. Let's do it.
All right, guys. So diving into headlines, up first, one of the big movers Friday, we had HOL. So taking space company Astra public. Shares were up 15% after hours on Friday with an announcement that they landed a new contract from NASA. So I do own shares of HOL. This is one of several space Spacs out there. This one got a lot of attention, kind of dipped off, and then that NASA deal really sent this one, back up there. We're going to dive into those two new space deals later on, but HOL definitely, a comparison there with these space Spacs. And then we have some new Spacs that were filed last week. There are so many new Spacs that have been filed, so many new Spacs that are coming to market. I saw a tweet from Julian Klimachko today that we could have 16 Spacs priced tonight and offer shares tomorrow. But some new ones of note to put on your radar. So we have a new Spac coming from Switchback. This will be SWBTU. This is the same company that did SBE, which is now trading as CHPT, and SWBKU, which is their second SPAC. And I will note that SWBK shares are expected to split today or tomorrow. So keep an eye out on SWBK as we will see common shares and warrants trade for the first time this week. And with the announcement that they're launching a third SPAC, we have seen a common trend that sometimes that means a deal is near for the existing SPAC out there. And then we turn to RMG acquisition. So quickly becoming, one of the top SPAC names out there. They filed for their fourth, fifth, and then a random seventh new SPAC. So those tickers are going to be RMGDU, RMGEU, and RMGGU. So this is the company that did deals for RMO, which is the battery company I do own shares in. And then they have a pending deal for RMGB, which is for Renew Power, the largest clean energy company in India. And then their third SPAC, RMGCU, is still searching for a target. So again, if you follow the trend here, RMGCU could be worth a watch, as this could be the next one to announce deals, and a deal could be getting close with the announcement of those new SPACs coming from the company. So keep an eye out on RMGCU. And then we have CLOV, so Clover Health, one of the most talked about former SPACs out there. Of course, this was IPOC coming from Chamath Palihapitiya. They report quarterly earnings tonight after the bell or after hours. So, this is an interesting one because they have been the target of several short reports. Shares are now trading around $10. This was a $13 company, a couple months ago. So I'll be interested to hear what they have to say. I'll be following along those earnings, hopefully getting an article out after hours. I think maybe we'll get some clarity on some new deals and hear more about their customer growth. So CLOV definitely on the radar and on watch today. Then we turn to our two new deals announced today. So both new deals involved with space. So space, again, huge opportunity. I said this, before when Cathie Wood announced she was going to launch a space ETF. If I'm a privately held space company, now's the time, right, to reach out to try to get a SPAC deal done, to try to do an IPO. That's a major catalyst coming, that there is going to be a new ETF targeting space companies. You also have had, several prominent space news items with Mars and, the International Space Station. So definitely a good opportunity out there for space companies. So up first, we have NSH merging with Spire Global. So this is a provider of space-based data and analytics. They operate with a software as a service model in space. So a constellation of over 100 satellites. Deal values the company at $1.6 billion, $245 million pipe from Tiger Global, BlackRock, Sophia, and Barry Sternlicht's Jaws. The current shareholders will own 14% of that new company after the merger goes through. So 150 plus customers, revenue growth of 104%. They see revenue growing 100% annually from 2020 to 2025. Qualcomm is an investor in the company, which is pretty notable. Current customers are Ariane Super, NASA, the U.S. Air Force, and Chevron. They see a total addressable market size of $180 to $300 billion. Target areas of orbital, weather, aviation, and maritime. So their satellites design total launch time 3 to 6 months versus their competitors' 12-month time. So they are fast, scalable, and reliable access to space at a fraction of the cost and time of their competition. Their growth currently consists of investing in sales, marketing, and product development, expanding to new areas in which they specifically mentioned Latin America and the Middle East in the investor deck, expand their proprietary data set, the spine site analytics engines, and possible mergers and acquisitions. So again, recurring revenue, they see growing over 100%. So $36 million in fiscal 2020, $70 million in 2021, $1.2 billion in 2025. So they have an average contract length of 21 months and an average recurring revenue of $235,000 per customer. So again, that was NSH, Spire Global, software as a service in space. And then our big deal this morning, we have ticker VACQ. This is Rocket Lab going public. Rocket Lab, one of the big space rocket companies out there. So this deal is valuing the company at over $4 billion. It's expected to fund the development of their reusable neutron launch vehicle, targeting mega constellations, deep space missions, and human spaceflight. Oversubscribed $470 million pipe from 39 investors. Current shareholders of Vector Acquisition Corp, VACQ, will own 7% of the company after the merger. So Rocket Lab is one of only 2 U.S. commercial companies delivering regular access to orbit. The other one, of course, being SpaceX, one of the most talked about space companies out there, co-founded by Elon Musk, the head of Tesla. So over the last 6 years, Rocket Lab has completed 18 launches to space. Their first successful launch coming in 2018. They've also deployed 97 satellites for government and private companies across 16 missions. So they're the second most frequently used U.S. orbital launch company, only behind SpaceX, and globally they rank 4th. Space market, they estimate at $1.4 trillion by the year 2030. They see it worth $350 billion today. So missions are already booked for Rocket Lab for the moon in 2021, Venus in 2023, and Mars in 2024. So how interesting that as an investor, you can invest in a company planning to launch to the moon, Venus to explore for the search of life, and Mars to study the planet's atmosphere in 2024. Rocket Lab also recovered one of their rockets, so they're working on that reusable rocket program that SpaceX has gotten so much notoriety for. They have the only reusable small launch vehicle, the first 3D printed rocket engine, and the first rocket that converts to a satellite on orbit. So in 2021, they will employ Electron and Photon to launch a satellite to lunar orbit for NASA. This will serve as part of NASA's Artemis program to return humans to the lunar surface. So Rocket Lab is going to have over 132 launch slots every year. Current pipeline of $2.2 billion in deals, including $1.2 billion for launch-related revenue. That backlog represents 90% of their fiscal 2021 projected revenue. So that fiscal 2021 target is $69 million. Fiscal 2022, $176 million. And the investor presentation goes all the way out to the year fiscal 2027, where they see $1.57 billion in revenue. This was a high flyer this morning on that deal announcement. This one got rumored just last night. That deal was announced. So now we have VACQ shares up 30%. Again, still trading down where they were in the pre-market. Space launch company, I would fully want to at least get looked at by Cathie Wood for that new space ETF. And again, the SpaceX comparisons here, really put this company in the spotlight, as SpaceX is private and looks like it will be staying private for several more years. So that's what I've got for headlines. We're going to turn to the calendar now, as today officially begins the month of March. So we have several upcoming votes this month. Hopefully I got them all. I probably have a couple missing here, so we will take another look again. But we have upcoming votes this week. CFII voting on that merger with View Incorporated, the smart window company. We have IPV on March 11th voting on the merger with Ava. That's a LiDAR company. We have ROCH on the 16th, NBAC on the 17th, LOAC on the 17th, Replay RPLA on the 25th, and BFT on the 25th as well. And then, as I said, we have earnings out today from CLOV, Clover Health, March 1st after hours. And then Rush Street Interactive, one of our sports betting SPACs that we talk about, will report earnings on March 10th. Real curious to hear what they have to say, as they did launch in some new states within the last quarter and the current quarter. Remember, that is more of a iGaming play than sports betting. So that's what I've got, Spencer. Headlines, 2 new deals, and that exciting calendar for March that is just getting started today.
Yeah, on that calendar note, so it would stand to reason, Chris, that we're going to start seeing a lot more events, right? As far as merger votes, so let's see, 1, 2, 3, 4, 5, 6, 7 merger votes scheduled this month. That would seem to me to be a lot, right?
Yeah, it's definitely a lot. And the other takeaway is, of course, March ends the quarter. So
Right.
Some of these companies, when they announce in those press releases, it'll say deal expected to close in the first quarter. If they want to stay on track and keep their word from that press release, they need to get the deal done by the end of March. Obviously that's not always the case, and it looked like the SEC was backed up for quite a while. But yeah, lots of deals closing to get through the first quarter of this month.
Yeah. So between the votes and then the earnings reports, which, even though we're coming out of earnings season, the fact that the number of SPACs is just exploding, it would stand to reason that there's just going to be a steady flow of SPAC-related PRs, whether votes, earnings, or otherwise, for the foreseeable future. So that's exciting. That's exciting, for sure. Okay, Chris, let's get to, and I see some questions in the chat and some tickers. We will get to those tickers later on in the hour. I promise we'll have plenty of time for that. Plenty of time for that. What I want to do now, though, Chris, is just because we don't have a guest today, so let's have a bit of a longer discussion, if you will, just about. Actually, before we do that, let's go to our watch list, because there's a couple movers on our watch list that we didn't cover yet. Correct?
Correct.
All right. Let's go to the watch list real fast, and then we'll get to a longer discussion about Bill Ackman and what he's doing with his SPACs. But first, to the watch list. All right, Chris, what's on the watch list right now?
Yeah, so after seeing lots of red last week, we do, of course, have lots of stocks up today.
Mm-hmm.
But the biggest ones that jump out for me on our watch list, we have MP Materials, up 13%. This one has just continued to move higher. It did dip last week, with everything dipping down. But again, this is a pure play rare earth mining company and in the spotlight with, the news that China looking to limit exports and Joe Biden working, to streamline the process here in the U.S. So no surprise that this one is recovering today. Again, I think it's a great long-term play on the rare earth mining. DraftKings up 11% today.
Hey-o.
DKNG. So, reported earnings Friday, strong earnings, beat estimates. They raised their guidance for the full year. And now the analysts are out today with new price targets. So, I'm seeing price targets raised to $72 to $80. Kind of all over the place, but it looks like analysts for the most part were impressed with that quarter. Again, they saw higher revenue per user. They saw more users. And the first quarter, which hasn't been reported yet, of course, added Michigan and Virginia. And they're off to a strong start in both of those states. So, this one up big today.
And before we go on, let's just look at those in the newsfeed here. So you can see the earnings. That was Friday morning. That's old news. That's yesterday's news, last week's news. This morning, follow-through action. How do the analysts react? They like it. Rosenblatt, as Chris said, price target raise. Morgan Stanley, price target raise. So Canaccord, price target raise. So some of that's playing catch up. The analysts are forced to react when there's a fundamental event like an earnings report. But still, good to see if you're a DraftKings bull. I am, even though I do not own the stock. What else is on the watch list, Chris? Oh, that was it.
Yeah, and again, shout out to Benzinga Pro. We talk about that on the show all the time. But, as I look at my watch list and I see DraftKings up double digits, you just click on it and you see right away, boom, analyst raising price targets. So right away, I can tell, hey, analysts are bullish, on that quarterly report. So again, no surprise, strong numbers. DraftKings is one of the best pure play sports betting companies out there. And, analysts love this one after that report.
Yep. Okay. That was it for the watch list. Unless I missed anything.
No, that's it.
All right, Chris, I want to get into this middle segment here that we've got to talk about because I think the first SPAC that I bought was the Bill Ackman SPAC, right? The PSTH. I'll bring the ticker up on the screen. PSTH. I bought this SPAC shortly after he announced it. And one of the reasons I did that was because, A, it's Bill Ackman, and he's a very well-known investor for a very good reason. He has a good track record of some losses, but mostly wins. Tends to get his way. Very influential. And the terms of his SPAC seem to be a little bit different than the other ones, and he made it sound like he was doing it better. And I thought, well, at the very least, the guy knows how to do a deal. The guy knows how to find value, and is not going to, screw his investors by buying a crappy company. That was why I bought it. That was a few months ago now. Nothing's really happened since then. Maybe you can update us on if anything has happened since then.
Yeah, so PSTH, one of the hottest SPACs out there, the most talked about, mainly because it's Bill Ackman and also because of the size, right? This is the largest SPAC out there. So not a ton of companies that it can take public because of that large size, and again, this one priced at $20 instead of the usual $10, so it was different there. The way Ackman set it up, there's going to be more of a lockup for the founder shares. So he really tried to create something different, something unique. So now last week we had some news out on Twitter. A couple people, reached out to Bill Ackman and they started asking him questions, and Ackman responded. And those responses now have led to PSTH, Pershing Square, filing a disclosure statement, in a press release saying that if you want to know more about the company, you need to follow Bill Ackman on Twitter, because they could, make statements public via the Twitter account of their chairman, Bill Ackman. So to me, that screams either, hey, Bill Ackman was, saying stuff he shouldn't have, or hey, Bill Ackman's saying stuff and it's about to happen. So 3 tweets jump out. And again, this is Bill Ackman. He doesn't tweet a lot. He tweeted 6 times in the month of February.
Look, he's got 161 tweets in the history of his account.
Right. So, I mean, he doesn't tweet a lot. And now all of a sudden you have, some information that could be very, beneficial to shareholders. So the 3 big tweets were that he said, someone asked him, hey, you're launching a second SPAC. Could shareholders of the first SPAC, receive first access to those shares at, the offering price? And he said, sure, done. And then the second one was someone questioning, hey, how are you going to be able to track, who's a shareholder and, get them, first access? And he said, quote, we have the technology, unquote. And then another person asked, because of that second SPAC, hey, are you going to announce a deal for PSTH before you announce a deal for your second SPAC? And he simply just said, yes. So 3 big tweets, which again may not seem like a big deal, but to me, I read through that, and the biggest thing that stands out is, hey, he just confirmed that they're launching a second SPAC. So that was, rumored on Twitter. Someone found the filing. Spac Tiger, who I follow on Twitter, we got a headline out on Benzinga Pro that said, Pershing Square Holdings 2 has been filed, but there isn't, an actual document yet. Just the name was filed. So Ackman confirmed that, right? He didn't come out and say, hey, we haven't launched a second SPAC. Hey, we're not doing a second SPAC. He said, yeah. And then the other thing is reward his shareholders of PSTH. So what could that mean? Will we see people jumping into PSTH now so they can receive, access to the next SPAC at that offering price? And then the other big thing is him saying that a deal will be announced for PSTH before the second SPAC. While it may seem like a no-brainer based on the timeline, to me it jumps out as saying, hey, he could be close to announcing something, because again, this second SPAC could be a completely different size in terms of dollars. It could be targeting a different market. So what's to stop that second one from getting a deal done first, based on the size of it or the potential targets, and maybe a bigger pool, whereas PSTH only has 30 companies to choose from based on the size. So, what do you think, Spencer? What do you read from those tweets, if anything?
First off, I'm excited that I would get some kind of privilege, some kind of better position in line in the second one. But I can't even think about that because I'm still worried about the first one, right? We don't even know. In some cases, the size of the SPAC is almost like a hindrance, right?
Absolutely.
Because it limits who they could buy at what can be considered like a quote unquote reasonable valuation. Right? There are only so many. Like, how big is the SPAC? $5 billion?
Yeah, over $5 billion.
There are only so many companies available for $5 billion, and he's already limited himself to the financial services world. I mean, how many companies within that space are there? We've talked about this a number of times on this show. Coinbase, well, not anymore, right? They're doing a direct listing. Stripe, maybe. We don't know. You know what I mean? But there are only so many options out there. I would like to see that go through, and I would like to see the market react positively to the first transaction before I consider necessarily getting in on the second one. Because again, I bought this because I thought Bill Ackman, if anyone could buy a growth company without paying a ridiculous premium, it'd be Bill Ackman, right? I'm not owning this for a trade. If I owned this for a trade, I'd probably get out, when they announced the deal. But I have faith in Bill Ackman's ability to find a good company And I would like to see them. I would like to see A, that happen, B, the market react positively to such an event before I even think about getting in on a second PSTH. But I would assume he can raise the money. That's not an issue, right? That would seem to be.
Yeah, I don't think that's an issue. And, Spencer, you bring up a interesting point talking about, the timeline and when maybe, you could sell shares.
Yeah.
So that's my question to you. Again, I don't own PSTH. I know you do.
Yeah.
So if he has laid out a plan and say he puts this plan out there that, hey, anyone who owns PSTH up until X date will get first crack at the second SPAC. Do you think that keeps people from selling when PSTH announces a deal, if they announce that deal before the second SPAC is filed, because everyone's going to want to stay in line for that second SPAC?
That could create a very interesting, almost like an ex-dividend type of an event, right? Where you have people watching the calendar, people who have their one eye on the calendar, and they're like, all right, I need to hold by this on this day. I need to hold if I want to get access to the second SPAC. And then when that day comes, when that day hits and there was that first day afterward, that could be a very interesting tradable event if that's the way they do things. I'm not saying we don't know if they will, but that can make for some interesting volatility in PSTH. In a way, could end up screwing the people who decide they want to hold. But you might see people play it like they would a dividend capture, right? Where you play into the dividend and you sell after the X date, and then you see the stock adjust, and it doesn't always adjust based on the dividend. Sometimes it goes down more, sometimes it goes down less, and there's your alpha, right? So that could make for a very interesting date. I don't know what I would do to answer your question, Chris, to be honest with you. I really don't. Like I said, I want to hold a PSTH, so I probably wouldn't sell it. I probably won't sell it before any merger they announce. But again, he said they would announce the first deal before they announce the second SPAC, right? So yeah. I guess what I want to do is wait and see who's that first deal, and if it's a company that I want to own, then yeah, sure, I'll get into Ackman SPAC 2.0. But if it's a company that I don't want to own, then I don't see why I would do that, regardless of whether or not, I'm second in line or third in line or whatever. Obviously, the initial investors are first. But yeah, I just want to see some progress. It's been frustrating to see a lot of these SPACs move a lot on these announcements, and I understand that Ackman is doing his due diligence and going about this the smart way. But it's hard not to have some FOMO, right? When you buy this thing because it's got the Ackman brand, and really prior to the last couple of days, it hasn't really done that much. So it's been a little frustrating for me.
Right.
I would love to hear about people in the chat. Maybe people in chat disagree with me about how they would approach that, but that's kind of how I'm thinking about it. Is first, let me just see who they buy, and then we'll go from there. We'll cross that bridge.
Yeah, so guys, if you're in the chat right now, if you own PSTH, tell us what you think about being, first in line on that second SPAC. Does that make you want to hold your shares longer, or does it have no effect? The other thing, Spencer, to talk about are if he's able to do that, right? If he's able to offer shares of the second SPAC to people that own the first one, do you think there's any sort of ripple effect? So again, some of these SPACs are, one-time companies, but any of these ones that have done lots of deals, so let's say, Chamath, right? Do you think that then it puts pressure on any of those management teams to, offer the same sort of incentive to future SPAC deals?
It's a question. And I would answer your question with a question. Have we seen other SPAC issuers do the same terms Ackman has? Because if they have, I haven't seen it.
I have not seen it.
Then the answer to your question might end up being no, right? If Ackman isn't able to influence the rest of the SPAC market in terms of how they structure their deals and the lockups, then I don't see why anyone would copy him in this specific instance. I mean, Bill Ackman is not nearly as big of a SPAC influencer as people like Chamath Palihapitiya, for example. There are a lot of SPAC influencers higher on the influencer list than Bill Ackman. Influential as he is on Wall Street, he's not. I wouldn't put him near the top of the influential list on Spac Street. So no, I don't think necessarily. I guess it would depend on the success of the stock, right? If the stock goes up, then maybe I could see that happening. But thus far, that has not been the case. They haven't copied his structure, his lockup terms. So I don't see why that would start now. PSTH going to 50 changes everything. So going to 60, that changes the game a little bit. But for now, no, I wouldn't say that.
And then what do you think about the press release having to disclose, that his Twitter account could be the source of information?
That was good. That was great.
We saw obviously Elon Musk be in the news, years ago, right? When he was talking about, shares being undervalued of Tesla, shares being overvalued. Now they're looking at, tweets about, Dogecoin, possibly, moving, the crypto higher. To me, I'm glad they got in front of that. Is that a trend now to watch where I
certainly hope so.
We see these companies and their CEOs, issue some statements and respond to questions on Twitter, and we should be constantly, monitoring their accounts for, information and clues?
I certainly hope so. That's I think that's awesome. Acknowledging that someone can make market moving commentary on Twitter. Bill Ackman, I think, is trying to go about things the right way, and I hope it sets a good example for other people to say yes, even if it's just, I know it's just an acknowledgement in a filing, and who really cares? It's not a big deal, but just to acknowledge that, hey, yeah, I might say some stuff on Twitter that could affect the stock, and that could be notable news for the market. I think that's an important step. So I would love to see everyone else come out who's going to be on Twitter and say the exact same thing. But yeah. I don't know if that'll happen.
No, I agree.
Yeah, so we're seeing some interesting commentary from chat on this. Bill Ackman has he's got a big reputation on Wall Street. He's fought a lot of battles. He's won some. He's lost some. He got crushed pretty hard on Valiant. He got crushed pretty hard on Herbalife. But he's won a few, and he's his hedge fund, after a couple of years of underperformance, I think had a great 2020. I think had a good 2019 too. So he took his lumps like everyone does, but I'm just waiting to see. That's all it comes down to. I'm waiting to see who they're going to buy, because at the end of the day, everyone who owns PSTH, we're going to get this company, and we just want to know who that company is going to be.
Exactly.
So hurry up, Bill, please. Thank you. Okay. But before we go to the chat, I saw this article, Chris, over the weekend that I wanted to run by you. This is from. It's actually a few weeks old. It's from looks like some guy's blog. It's called Works in Progress. And I'll give you his name, Byrne Hobart. And I want to read you this interesting thing he said about SPACs. And maybe that could explain why SPACs have boomed in popularity. He talks about SPACs within the context of IPOs as well. Let me read you a sentence here. The key driver of excitement about SPACs is that they can take companies public based on a future-focused outlook. When Virgin Galactic went public, merging with Chamath Spac a few years ago, blah, 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 or a few months ago, blah, 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 they gave some estimates. While this was optimistic, it's also demonstrative. A company like Virgin Galactic would have been almost impossible to take public in a conventional way because backwards-looking financial statements showed only losses. It may not work out as a business or live up to its projections, but those projections got more plausible once it had access to public markets for funding. So basically what he's saying is IPOs, due to the regulatory nature of IPOs, they can't make specific forward-looking projections. They can make broad statements about the future, but they can't make specific forward-looking guidance estimates about revenue or earnings or whatever over a specific time frame. SPACs can do that, right? because it's already a public company that's doing the buying. The regulatory laws are different, so they can do that. So the fact, I'm wondering, asking you, Chris, if you think that's a reason partly for all this excitement around SPACs, is that these companies are allowed to come out and say, yes, we think at the end of year one, we're going to do this. In year two, we're going to do that. In year three, we're going to do that in terms of revenue. Do you think that's part of the excitement here?
100%, yes. The two biggest reasons I think, SPACs over traditional IPOs are the timeline, right? You can go to market quicker with a SPAC than a traditional IPO because you don't have to worry about the roadshow, the filings, and all the scrutiny. And then the second reason is forward-looking statements, right? Yeah. So if you're a traditional IPO, you can talk about your past revenue. And then the big thing, if you ever read an S1 for a traditional IPO, it's all about the TAM, right? The total addressable market.
Yep.
So, what's the biggest amount of money that we could make, right? But they can't come out and say, hey, this is how much money we're going to make next year based on our estimates. You heard me talk about the deal today, right? For Rocket Lab, they estimated revenue all the way up to fiscal 2027. That's 6 years away. And they're able to do that with a SPAC because a SPAC is technically a merger, not an IPO. So you can issue forward-looking statements. You can talk future. That's the same reason why CEOs of these SPAC deals, they love coming on the show because they can talk about their future revenue. They can come out and say, hey, we expect to do X amount of money next year. Whereas if it was a company, going public with an IPO, if they come on our show, they can't say that, right? They can't talk about, hey, this is how much we're going to make next year. So I think that's the strongest reason, for companies to go public SPAC is you can talk about the future.
Yeah. It's just it's a different regulatory process, and the laws are different. And until they change those laws, there's no reason why it wouldn't stay like it has, right? Where IPOs, for all the buzz that IPOs get, and they get a lot of buzz, and that's by design, right? That's the point of the roadshow and the offering. SPACs, there's just way more meat. There's way more meat to generate buzz, and it's via those future projections. So, all right, we will get to questions from the chat in a second. I do want to tell people that you may have missed our last couple of shows. It is because they were not live. We had the Benzinga Cannabis Capital Conference last week, Thursday and Friday, that preempted all of our daily programming. But what Chris and Mitch did is they recorded a couple of SPACs attack. There was one Thursday, one Friday. They aired them in the evenings. Chris, I think some people may have missed those. If they did, can you give us a quick recap on what you guys discussed?
Yeah, absolutely. So guys, again, Benzinga Cannabis Conference, if you're interested in cannabis stocks, Benzinga is the place to go for that research and, all those exclusive interviews. But, we didn't want to leave everyone, left out. So what Mitch and I did was we recorded shows Thursday and Friday, and then they aired, pre-recorded around 7 p.m. Eastern time. So, obviously we were talking about, the market while it was open, and we were talking about some purchases we made. And one of the common themes that I had was that, with all these SPACs trading down on the red days, I went and looked at a low risk opportunity. So I found some units, trading below $11. So if you're unfamiliar with SPAC units, the units are when they first price, they go public. A unit includes a common share and a portion of a warrant. So not all brokers allow you to purchase units. So that's, a key point here, that you can't buy units on, Robinhood or Webull, right? So that's another opportunity for a possible price jump down the road, because those units will split into common shares and warrants 52 days after the filing. So what I did was I bought some units trading incredibly cheap. So one that I bought was FSNBU. So this is a new SPAC from Fusion Acquisition, the same team that announced Money Lion. And these SPAC units were trading at $10.02 when I purchased them. Looks like they're a little bit higher today, but those units come with a third of a warrant. So I'm buying units at $10.02. I'm able to trade in common shares, right? If I don't like the deal that they announced, at net asset value, which is going to be $10 plus interest, plus I'm getting a third of a warrant. So I'm essentially getting a warrant option for free here. So that's a very low risk way of playing SPACs, is to buy some of these units that are trading closer to $10 now just because of that sell-off. And I see a question there, Ruel. So yeah, so PSTH was actually the exception. Those ones automatically split for brokers. But otherwise, yes, you need to call your broker to split shares. Now, you don't have to split shares. You can keep holding the units. But if you want to split them into common and warrants, you have to call your broker and have them split. Some brokers charge for that. I know Fidelity is one that doesn't, but, to each their own. Make sure you look at your broker fees, as that may be a limitation going forward. So up on the screen here, yeah, so FSNBU. So again, you get a full common share and you get a third of a warrant. So great low risk way of playing. Now, the thing is, you may have to be patient, right? They have up to 2 years to announce a deal. So you could be just sitting, parking your cash into the SPAC, and you may have to wait a couple of years. So, your risk here is the opportunity cost of maybe buying something else. But to me, with the market sell-off, I took advantage and I bought some of these units, that I saw on sale. The other ones were, KCACU. This is the same team that did QuantumScape, which was one of the best performing SPACs last year. So they issued units last week for their second SPAC. Now, normally on a green day, I would have expected these units to trade, over $11. But because of that sell-off, they traded down to like $10.80. And so people were able to buy units of a established management team that did one of the most successful SPACs, get those units under $11. That, seemed like a no-brainer to me. And then we had another one, TWLVU. So a newer SPAC group, but those units actually traded under $10 on day one. So you could buy in, and again, low risk. And I hate to say, no risk at all, but essentially that's what you're buying with some of these units trading at $10. Because you get a common share that you can trade in for $10 plus interest, and you get a portion of a warrant. So you actually gain on your purchase with that warrant option that you can sell, down the road. So what do you think, Spencer, on that unit?
I like what Mike just said. As long as you accept or believe that it's unlikely that the stock could trade below its $10 floor, which is possible. Chris, you just said it happens. But as long as you accept that floor to be there, then it's kind of like it kind of sounds crazy to say, but it kind of is a cash equivalent. It kind of is.
Yeah, and and it almost seemed like the gift that the market gave us last week for me looking at some of these units. Again, when we had Julian Klimachko on the show, one of our first guests, he talked about, SPAC arbitrage, right? And using a heads I win, tails I win big. Yeah. And he, of course, with his SPAC ETF, he's able to buy these SPACs at the unit price, right? The $10. And then, he can sell those warrants, later on when they get issued. He can sell the stock when a deal is announced. He uses different strategies, right, to capture, gains down the road. To me, I can buy these units. I can wait 52 days and then I can split them. I can sell my warrants or I can sell my common shares, take out my cost basis, play with the house's money with the warrants, and I just made my money back that I put into these SPACs. Again, I hate to say no risk, but you're getting, yes, a cash-like play here with some of these units. And we saw a SPAC sell-off in October, and now we've seen one now. If you look at the times other than that, you didn't see a lot of units trading under $11. Right? Yeah. Because units have that built-in common share and portion of a warrant. And you don't see a lot of warrants trading under $1.50. So, there's another one that I own, LEGOU and PUCU, PUCKU. Both of those, you get a full warrant with your units. So you talk about upside, you get a full warrant. So there's LEGOU, trading under $10.50. You get a common share and you get a full warrant. This company is targeting renewables, infrastructure, and energy as well, which to me are high growth areas right now with the new administration. But it's an opportunity, right, where you can take advantage. You get that common share and that warrant. You also have the opportunity, again, when some of these other brokers start offering common shares and when warrants get offered, you could see a bump up, on that day. And then when a deal is announced, you could see a bump up. So you have several opportunities, to possibly get a good return. And if you don't see that pop or, get that strong return, you still at least don't have the high risk of some of these SPACs trading, over $12, $13, just the common shares, right? So
the other downside though is if for whatever reason they trade below their net asset value, and let's say you've got a large position, I don't know how liquid these warrants are. And Chris, maybe you would know more than I, but I'm just saying I don't know how liquid. So if you need to get out, I don't know how easy that would be.
Yeah, and the warrants for the most part, again, most of them trade over $1.50. There are some that trade under $1, on ones that may have announced a deal that wasn't well received. Because again, a warrant is like an option, right? It gives you the opportunity to buy a share at $11.50, right. Is the most common on all these SPAC deals. So yes, ultimately you have to find a buyer for your warrant. Your common shares, though, right? We know that when that deal is announced, you can reject and you can trade your shares back in for the net asset value. Mm-hmm. The warrants, you don't have that same opportunity. So there is a little bit more risk. And if a deal is not announced in the timeline, right, your warrants expire worthless. So that's the risk with the warrants. But that's why, again, I say if you buy units at $10.02, what does it matter, with that warrant? Because you just made your money back in the common stock alone. The other one that really surprised me last week that I bought into was Soaring Eagle. So SRNGU. Soaring Eagle raised over $1.5 billion. This is the management team that took DraftKings and Skills public, Harry Sloan and Jeff Sagansky. On a normal market day, when this thing went public, I would have expected these units to price over $12 based on that management team, based on the premiums that they demand. But you had units trading under $11 last week. And again, I think you only get a fifth of a warrant here. So you don't get a ton, on the warrant side. But I fully expect that these shares, when they're available to traders on other trading platforms, people are going to want a piece of this because they want to know, hey, what is the team that landed DraftKings and Skills? Yeah. What are they going to acquire next? So, we talk about SPAC management teams all the time, right? And Chamath jumps out, Michael Klein jumps out now with Churchill Capital. To me, Harry Sloan and Jeff Sagansky, they jump out because DraftKings and Skills, I think, were two of the best deals done over the last year. And, I'm betting on this one because I think they get another great deal. So I do own shares of SRNGU. But, guys, I just wanted to bring some units to your attention because for those of you who can buy units with your broker, I think it's a very good, low risk, possible high reward strategy to play SPACs rather than chasing some of these just common stocks that are trading at premiums.
This was a fantastic discussion that I'm going to bookmark and come back to, I think, because this is the strategy that Chris outlined is extremely low risk if you accept certain realities, right? Extremely low risk. I'm going to have to come back to this and maybe use it myself. But all right, it is 11:50, Chris. We promised we would do some ticker time. Let's do it. Okay, drop those tickers in chat. We will cover VACQ. Rewind that puppy like we talked about that. What would you say? A half hour ago or so?
Yeah, probably like 11:08, 11:09.
So, yeah, rewind the video about a half hour. You will get to our discussion on VACQ. Okay, I'm just going as I see him. SRAC, Stable Road. You know this one?
Yeah, so Stable Road, I own shares in. They're taking Momentous, a space company, public. Again, 2 space deals announced today. We have a space ETF coming. This is the one called the FedEx of space, the last mile delivery. They have a partnership with SpaceX. I really like this one. I think there's a lot of good space stocks out there. I'm excited about the space market. And I think obviously that space ETF is a major catalyst to, boost some of these ones higher.
Chris, you know what I'm excited for?
What are you excited for?
I'm excited for all the blank of space analogies. I'm waiting for the Uber of space.
That's right.
I'm waiting for the Chipotle of space.
How about the Zoom of space?
The Zoom of space. Where is the Zoom of space?
You can Zoom with
we need
the
that.
ISS.
We need that. we need the Zoom of space. We need the DoorDash of space. Come on, guys.
Yep.
Let's get on this. All right, back to chat we go. Could have spent all day having fun with that. NPA, New Providence.
Yeah, so NPA, another space one, right? You guys love your space stocks. So this is the 5G play on space, right? So I don't know what you want to call that, Spencer, but they're targeting 5G in space with those satellites. To me, this one jumps out because they have deals in place with Vodafone, AT&T, American Tower. So again, they're a couple years away from revenue, a couple years away from that plan. But, if they can hit on what they laid out in their investor presentation, I like this one going forward.
All right. What about GIX?
Yeah, so GIX, so they extended the vote, right, on that date.
Ooh.
So they are taking Up and Cloudbreak Health public. So kind of the telemedicine digital health play. They extended the vote date. And again, this one has dropped down to that $10 level. I don't know this one as well. I will say, there's lots of competition in that telehealth play now, with Teladoc obviously leading the way. So, that vote date extension concerns me since they didn't even try to get the first vote done. So not a lot to add there on GIX.
Yeah. All right. What about CFII?
Yes,
smart windows. What is smart windows?
Yeah, so CFII, I said that one at the top.
Yeah.
They have a vote date coming up soon. This one, to me, you look at that, it's trading under $10. So, what's going to happen? Are people going to jump in this now as the arbitrage play where you can buy shares and trade them back in at net asset value? Maybe. To me, I never got as excited about the smart windows. And the reason why was, so I think smart windows is a great growth market, right, long term. But the problem we have now is they were going after, right, commercial real estate more than residential in your schools and stuff. We're seeing businesses push for remote work. So how many of these buildings or these new builds that they had signed deals for, how many of those, these companies pull back on, real estate deals now? So to me, there may be a dip here in some of their growth prospectus.
What else here? What else? What about SCLEU? Broad scale acquisition. You know that one?
Yep. So SCLEU, it's a ESG sustainability play. I own shares of this one because, again, sustainability to me is a key growth market. And I'm interested to hear, what they sign. And I think they have a strong management team. You have Betsy Cohen, who's done several fintech SPAC deals. And then you also have a former director from Blink Charging, right? And we talk about Blink Charging and the charging infrastructure story. So maybe they go that route, with the deal as well.
Chris, can you cover Chamath SPACs just announced? Did Chamath just announce a SPAC that we don't know about?
So there hasn't been any activity that I know of. Chamath put out a tweet last weekend talking about how he was, ready to F things up. And I really thought that meant we were going to get some deal announcements last week, but we didn't, right? So I own shares of IPOD and IPOF. I think we're close to getting deals from him. On the soundboard, we're close to getting deals, I think. And then also, I talked about on the show and I wrote an article about he filed for his next 7 SPACs, the names of them with the SEC. So not official filings, but he filed the names. So then are we going to see some new SPACs from Chamath? And I think if we see new SPACs issued, I think we're getting really close to, deal announcements. But right now, Chamath's just been busy, doing these pipe deals.
Doing his
Right?
thing. Doing his
So-
thing. Trent Hizzy wants FMAC. That apparently has a rumor that they're going to buy Discord. On that note, before Chris gives his take on this stock, Benzinga has a Discord. Did you know that? Yeah, it's true. Benzinga has a Discord. I'm putting the link in chat.
Yeah, put the link in.
There it is.
We're trying to grow the Discord. I'm trying to get a Spac channel set up in there.
It's in the chat.
If we can get some channels set up for all our shows, you guys can come talk to me right in Discord. I know everyone loves Discord. So FMAC, I do own shares of this one. That rumor on Discord came from, the internet, right? So it circulated on Twitter. And the reason why was FirstMark, the parent company of this SPAC. They invested in Discord years ago. So that doesn't mean they're going to take Discord public. It does mean that they own a portion of Discord and that they have, familiarity with them. But that wasn't a rumor, from Bloomberg or Reuters or any of the strong sources. FirstMark, I really like, though. Jason Robbins, the CEO of DraftKings, he's attached to this SPAC. FirstMark, again, has some investments in some great companies. So this one, if you look at that chart, that shoot up to 14, that was on that Discord rumor being circulated around, and then look at what happened to shares. So that's why it's important. Take these rumors with a grain of salt. Pay attention to who the sources are, and don't go chasing the rumor. Chances are you're going to have a better buying opportunity, on people selling the rumor.
Yeah, guys, we're everywhere. We're on Discord. We're on all the major platforms. We're on Twitch, Facebook, obviously, Periscope, YouTube. We're even on LinkedIn. We're everywhere. Everywhere. Okay, we'll do one or two more. They keep dropping in this Bridgetown, BTWN. So let's take a look at that.
Yeah, so Bridgetown has been in talks with Tokopedia for a while. That's been the rumor.
Yeah, what's been going on with that?
So Tokopedia is the Indonesian e-commerce company. I don't know if this deal gets done because Tokopedia, it looks like they're merging with another company in Indonesia. They're fully committed to, maybe exploring a traditional IPO instead. So this one trades at a very high premium. And, I question what's going to happen when Tokopedia announces that they're filing, a traditional IPO instead. There is a chance that, of course, they land Tokopedia or a better company. But for me, this rumor has been going on for too long. I think there's more of a risk here than the upside.
Interesting that there's a fine line between rumors that are exciting and rumors that are just old now and gone on too long. What about, there's one that I want, RMGB.
Yeah, so RMGB, this is Renew Power. This is the biggest clean energy company in India. I do own shares of this one. Chamath was part of the pipe on this, and he has tweeted out several times on his beliefs in, clean energy, fighting climate change, and this was one of the ways where he attached himself. So, this is more of an international play, growing in India, which, obviously has a very large population. They're trying to grow their clean energy market there. And, this is the leader, and I think it's a good growth, prospect for that region.
What about ROCC? John Doe, if that's your real name, says, Chris, how can you have a deal signed for weeks and not announce it?
Yeah, so ROCC, I think, was the one that announced, in their prospectus that they had a target company, but they didn't name them. And that's not something we see typically with these SPACs, right? So to me, it's very interesting, and I don't know what is the timeline. How long do they have, to say that? And also, doesn't that take away some of the fun or the chance for a reward when they already know who their target is? To me, it makes me stay away.
All right, it is 11:59, guys. You've got the Zinger Nation Power Hour coming up next. The link is pinned to the top of our chat. It is also in the description of this video. Those guys are crazy. They got a lot to talk about. Chris, as always, your wealth of knowledge is infinite. There's nothing you don't know, and if there ever comes to be a thing you don't know, I'll be extremely disappointed. But it's been a pleasure to talk to you. Mitch will be back tomorrow. Guys, there's our link to the Discord up on the screen. Also, hit that hit that like button. Hit that like button in YouTube and on Facebook, on Twitch, on Twitter, wherever you're watching this. Smash like, hit subscribe, hit share. Chris, any final thoughts you want to leave us with?
I will say again, Spencer, thank you for filling in so we can keep the show going when Mitch is out. He will be back tomorrow. We have some exciting interviews coming up this week, guys. So we have interviews lined up for Tuesday, Wednesday, Thursday, Friday. And I don't want to tell you all of them because it spoils the surprise with some of these. But we're going to be talking to a company that announced a Spac deal, a Spac that has not announced a target. So that'll be an interesting one, right? Because we can dive into, how are they doing their due diligence? What target are they looking at? Then we have a company that already went public via Spac coming on for an interview.
Oh, man.
And then we have someone coming from a leading IPO company to talk the Spac market. So we have a very exciting week. So
do you want to maybe tease one of them or no? You just let it sit there.
Yeah, I hate to tease and announce too much, but you will say tomorrow, since tomorrow's only a day away, we have Bullhorn coming on. So that is BHSE is the ticker. They are targeting the sports market. They were rumored to be targeting Reebok at one point. They have Baron Davis, former NBA player, attached to this SPAC. So very excited about this one. And if you look at the chart, it is trading close to $10. I know Mitch owns shares because he saw an opportunity there to get shares at under 10.05. So very excited about that interview tomorrow. We'll try to do some more announcements, later on this week. But
all right,
what do we have coming up on Zinger Nation Power Hour, guys?
Oh,
make sure you tune in.
The usual chaos, Chris. The usual chaos. So we're gonna hop. Everyone, tune into Power Hour. It is on now. The link again is in the description. It's in the chat. Go to youtube.com/Benzinga, and it's on right there. Chris, thanks a lot. We will see you tomorrow.
Bye, everyone.